Welcome on the first episode of How to Understand the Market. It's Nico. I'm very happy to have you on this episode. This chapter will be composed of different episodes where we deal together step by step with information that will allow you to understand, progress, and improve your skill. All the information I will share with you in this video is information that I learned from my year of trading experience and from my former mentors. I've not invented anything. I'm only helping you as mentor to bring you at level of profitability and successful learning. In this first video, we will study the liquidity of the market because I think from my personal experience it's one of the most important elements before even understanding the market structure. Of course, I know if you are here in this mentoring, you already have level of knowledge. I will explain during the first episode how and why price create liquidity and how understand it. Good viewing to all. So, what is the liquidity of the market? And how to understand? The liquidity of the market is the most important thing to understand. Because without liquidity, you don't have any move of the market. Price operate with the maximum liquidity, and the Forex market is the largest place of liquidity in the market. And that's why it's so much important to understand. In fact, you must understand the liquidity is everywhere. And the bank trade all the time with the same things, because behind the Forex market is the bank, algorithm, and something like that. You must to understand how the strategy works. Just the bank create ton of liquidity for the retail liquidity to be provided on the Forex market. The Forex market don't have any emotion like you. So a lot of investor and a lot of trader fail because they don't understand where is the liquidity. And that's what we talk today on this liquidity case study. So the first, I will draw you an example of what the market did and how to understand the market. This is a simple explanation and I will explain to you after. So I'm drawing on the first just an information, just drawing about you can see all the time during the market. I will not speak about anything, just about liquidity on this first episode. So let me show you an example. Perfect. So this is for a lot of people just like a AK structure. The price must to build up liquidity on this move. Because if we don't have any build up, we don't have any liquidity. So the first phase of the price is to build up liquidity. First is building the liquidity. Because if you don't have liquidity, you don't have move. That's so much important to understand. After the price just doing a retracement, because this is an expansion, create a retracement. And during the retracement, aka consolidation at this level, or this phase, consolidation, all this phase, I will make like that, consolidation, perfect. On this consolidation, the price grab all the liquidity from every highs and every lows. Let me explain why. Because every highs and every lows are liquidity. So on this high, we have liquidity. On this high, you have liquidity. On this high, you have liquidity. Because the price just, I will make like that to understand more, and you can better understanding what I'm talking about. just put some dollars to say, okay, this is the liquidity, and we have liquidity too here. And this is the consolidation phase, like aka retracement. So the price must to, during the retracement phase, the liquidity was created that prove the validity of an OB, like aka order block. What is the order block? Order block is just like point of interest, POI, or demand or supply. But I will not speak about supply or demand because I don't want to speak about that at the moment because it's another episode. The order block is just a zone when the institutional made a lot of order and create imbalance, for example, and show you the validity of your POI of your OB. At the moment, I will not speak about that because this is not the courses of this video. So the price create an expansion at this level. And when the price create an expansion, it create aka an OB, right? It create another block during the retracement phase. But the price must to mitigate an OB, right? This is my OB, for example, this is my hobby. Perfect. This is my hobby. So the price must to mitigate the OB into the order block during the previous retracement because the liquidity was provided during all the retracement. The price building up the liquidity, consolidate, and after create the mitigation. Mitigation means just take out liquidity from one order block. It's like a bottle of water. For example, when you drink full bottle of water, if you drink full, we don't have any liquidity inside. Same things with the mitigation. So the price obviously just mitigate one times or two times because if we mitigate a lot of times, probably your OB or your POI is not valid because we don't have any liquidity inside. So during the retracement phase, the liquidity was created and that proves the validity of your bullish OB because this is a bullish intent and bullish interpretation of the schematic. For the bearish would be the opposite until the price is able to valid an example bullish OB. The momentum create another high or another low and the price collect all the liquidity before the manipulation. So the price creates the consolidation and create the mitigation and creates so the manipulation, thinking like a lot of people thinking the price will continue to go lower, lower, lower. But no, the price just took out all the liquidity from this OB to the extreme lot of time. And after the price just create a continuation to create another high. And that's how we understand what is the liquidity. So after the price create another high to the previous high and continuation after. For example, the price after that can create a retracement and a continuation, etc. That's how the markets works. But the liquidity was provided into different things. It's about supply, offer, demand, etc. We will speak about on other episode. This first episode was just the first episode to explain on liquidity case study. On the second episode, you will go on the chart to explain how it works. Thank you so much for watching and see you soon.